All right, good afternoon, everyone. Welcome to the Lift Up Homeownership Enrollment and Disbursement Training for 2024. We're happy you are all here, yeah, we'll wait a few more minutes as folks continue to trickle in. Could I have folks raise their hand to make sure that they can hear me? Perfect, thank you very much. And we'll start the presentation in just 1 minute. All right, good afternoon again, everyone. We are glad you're here at the 2024 Lift Up Homeownership Enrollment and Disbursement Training. A few housekeeping items before we start. There is a copy of the presentation, a PDF of it, included in the handout section of GoToWebinar. So you should feel free to open that up and follow along if you don't have it on your screen. Also in that handout section, we included the Lift Up Homeownership self-certification form. This is a race-based special purpose credit program, and so that is the self-certification form that will be required for homeowners to fill out to indicate they are a person of color. And additionally, we also have the Lift Up Homeownership disclosure, which is also required as part of the enrollment. My colleague Isabel Taponia has also put the Lift Up homeownership procedures in the chat, and so there's 4 handouts related to this webinar that should be available. It's the PowerPoint, the self-certification form, the disclosure, and the procedures. As we go throughout the presentation, feel free to throw your questions in the chat. My colleague Isabel will be monitoring the chat and we'll try to answer any questions as they come in. We'll also have time towards the end to answer any questions. And with that, we'll jump right into the training. So here's our agenda for today. What we're going to go over is go over the value of our homeownership programs. We're going to go over the workflow of how the Lift Up Homeownership program works. We'll go over the requirements of both the members and the households to participate in the Lift Up Homeownership program. We'll go over how to calculate income and best practices around that. We'll then go through the disbursement requirements and documents that are required for requesting disbursement of funds. We'll go over first-time homebuyer education counseling component that's a requirement of the program, and we'll end going over monitoring and retention and some helpful resources and contacts as well. So the Lift Up Homeownership program, we're really excited. This program started as a pilot last year, but this is the first year the program will be going kind of full-fledged. We're excited because the purpose of the program is to increase homeownership opportunities for people of color in New England, and the goal of the program is to narrow the racial homeownership gap in New England. There's a significant gap between white homeowners and homeowners of other races in every New England state, and so this program was stood up to narrow and address that gap. It is a special purpose credit program. However, it works the same way as our other homeownership programs, if you're familiar with those, the Equity Builder program and the Housing and Workforce program, in that all home buyers must use a Federal Home Loan Bank of Boston member as their first mortgage financer. And so they must receive their first mortgage financing through a Federal Home Loan Bank of Boston member. And similar to other programs, it provides down payment and closing cost assistance. So this slide just shows the power of what our homeownership grants can provide. The great thing about Lift Up Homeownership is that it's the largest grant amount between our 3 programs, and so Lift Up Homeownership homebuyers are eligible for up to $50,000 in down payment and closing cost assistance. So this slide just goes through an example of what that can mean for homebuyer savings over time. So on the bottom left there, you can see that through this $50,000 grant, the homebuyer was able to save a little over $300 per month, which is over $110,000 over the 30 years of the mortgage. And so we like to highlight that. Yeah, just that how far the grant can go to really help these home buyers build wealth in the long term and get into a home. So this is the workflow of the Lift Up Homeownership program. It works very similarly to our Housing Our Workforce and Equity Builder programs. And so our Federal Home Loan Makeup Boston members will be out in the field identifying eligible home buyers. They'll make sure they'll have the home buyer make offers on a home, obviously. And once the home buyer has an executed purchase and sales agreement, that is when they can apply to participate to enroll in the Lift Up Homeownership program. So after home buyers are identified, the member, the Federal Home Loan Makeup Boston member, logs into our community lending login system and submits the enrollment for us to review. It's a two-step enrollment review process on our end. And so we ask for 15 business days to complete the review. We can often get them done quicker than that, but we ask for at least 15 business days. So after we receive the enrollment, we'll review and approve it within 15 business days. We go back and forth with the member to correct any documentation that needs correction or to clarify any documents that need clarification, whether it's disclosure or income documents. So once we approve the review, the home buyer has access to our grant. The Federal Home Loan Makeup Boston member will then table fund the grant. And so the home buyer goes ahead and closes on their purchase. The member will table fund the grant amount. After the purchase, the member will come back to us through our community lending login system and request reimbursement of the funds through a disbursement request. So as part of the disbursement request, we ask for the final closing disclosure as well as the executed note and mortgage related to the Lift Up Homeownership program. That's why it has to happen after the sale closes. And so, yeah, so the member will then come in, provide us the documentation for disbursement. We then, again, go through a two-tier review process on our end. We ask for 20 business days to do our review of any disbursement requests. We'll work with you, our member, to clarify any documents or items that need clarification, and then we'll deposit the funds directly in to the member bank's Ideal Way account. So this slide goes through the program requirements and it compares it to last year as well. So you can see the column in the left is the 2023 program requirements. The program on the right is this year's 2024 program requirements. And so the maximum grant per household remains at $50,000 funds to the member. And so the maximum amount of funds that any single member can use in the 2024 program year is $500,000. We are going to have a special state-by-state allocation, and so we'll get to this later in the presentation. But there's 200,000, I believe, 250,000 reserved for each state specifically, because our goal is to get home buyers in each state, and so there's a pool of funds reserved specifically for each of the 6 New England states to try to increase the likelihood of getting a home buyer in each state. The grants can be used for down payment and closing cost assistance. That includes escrows and prepaids. Oh, I lost my mouse. Give me 1 second. And it can also be used to purchase up to 2 points of interest rate buy downs. The income limits are homeowners are eligible up to 120% of HUD area median income. They must be first-time home buyers. They must contribute $1,000 of their own funds. That can't be gift funds. That must be the home buyer's own funds. And the only other requirement is that the home buyer is a person of color and signs the self-certification. So this next slide goes through our state-by-state allocation methodology. So last year we just released all the funds on one day, and we didn't find home buyers in a few of the states. And so this year we are implementing a state-by-state allocation. So there'll be about approximately $250,000 reserved for each state. That will be reserved for 60 days, and then any funds that are not used within that state in 60 days will then be released to the at-large pool, and so other states will then get access to those funds after the 60-day period. Simultaneously, we will drop at-large funds with the state release, and so the first release on June 1st, we'll release the state-by-state allocation, and we'll also release an at-large allocation so that if any one state uses up its specific allocation, it can then enroll more home buyers using that at-large allocation. And this shows the allocation amounts. So as I said, each state will have $250,000 reserved, and then there will be a $3.5 million at-large pool. And so the full pool of funds for this year is $5 million, 3.5 of which can be used in any state, and then $250,000 that we hope will be used in each of the 6 New England states. So the grant can be used for down payments. It can also be used for closing costs assistance. That includes prepays and escrows and buying down interest rates for up to 2 points. It must be used to purchase a home within New England. So that's one of the 6 New England states. The home must be in one of the 6 New England states. And it can be used to buy really any type of home, 1 to 4 family homes, townhouses, condos, cooperatives, and manufactured housings are all allowed. So the next step is going to go into more specifics about enrolling home buyers. So as part of enrolling the home buyers, these requirements on the home buyer side, and so the home buyer must execute the Lift Up Homeownership program disclosure. It's just about an 8-page document. The first 4 pages go over some details of the program. On the last 3 pages, there are items for the home buyer to fill out where they disclose their income sources. They have to sign the program disclosure saying that they agree to all the stipulations in the program, and a loan officer must also sign the income section to attest to what the home buyers are providing in terms of their disclosed income. So the home buyers must provide and sign that disclosure. They must also provide and sign the race ethnicity self-certification form that is included in the handouts. They must determine that they meet the area median income requirements. So they must make less than 120% of area median income, and that's based on the county that they're purchasing a home in. They must also, like I said earlier, they must have a fully executed P&S. So to enroll a home buyer, the home buyer must have an executed purchase sales agreement. They must contribute $1,000 of their own funds to the purchase of the property, and they must complete home buyer education counseling using one of our approved educators and counselors, which we'll get into later in the presentation. This slide has some helpful pieces of information for our members in interviewing potential home buyers. And so when you're interviewing potential home buyers, please do make sure to review the program disclosure with them. Make sure that everyone that's over 18 in the household has signed the disclosure, and that they have indicated the correct number of people that will live in the property. And so our income limits are based on prospective income, so it's the income that they're expected to make for the year, which we'll get into a little bit later in the presentation. Then it also is dependent on the household size. So we use the HUD area median income limits, and they have different limits depending on the home size. And we define the home at their household as anyone that plans to live in the home in the coming year. And so we just want to make sure that the disclosure includes all members of the household that will be residing in the home for the upcoming year. So yeah, make sure that the disclosure is filled out. Make sure that the income sources that you understand from your first mortgage underwriting, they align or match up with what they have disclosed in their Lift Up Homeownership program disclosure. If an adult household member does not have a job or does not receive any income, they must sign the zero certification of income, which there's a link here in the presentation for you to access. And then there are some other considerations. And so we do allow home buyers to be employed by our members. If that's the case, so if one of your home buyers is an employee of your institution, that's okay. We just need a letter from your institution stating that they did not have any influence on the enrollment of their own enrollment into the Lift Up Homeownership program. And so that must be on letterhead. So we need that letter if the home buyer is an employee of you, our member. We allow for non-occupant co-borrowers, and so you can reach out to us if you have questions about that. They should not be listed on disclosure if they're not living in the household. And then we have some stipulations about, it depends on if they're providing regular income, if they're providing regular financial help to the borrower, then we would need to see that documented to count towards the borrower's income. Full-time students is another consideration, and so if adults that are full-time students are capped at $480 per year in income, unless they are the head of household. And so that's just another consideration, is that full-time students that are not head of household will be capped at $480 a year in terms of their income. However, we still need to receive all their income documentation. And then the other thing to consider is joint custody, 50-50 custody situations. And again, we default there to our definition of who's going to be in the household. So as long as that family member plans to live or reside in the household at any time during the coming year, we can count them. We would count them as part of the household. So be sure to include any joint custody children that plan to live in the household at any time in the coming year in the household count. This slide goes over the Lift Up Homeownership Program homebuyer self-certification. It's a fairly simple form, but it must be filled out for a homebuyer to qualify for the Lift Up Homeownership Program. Only one borrower on the mortgage must identify as a person of color. So if there's multiple home buyers, only one of them must identify as a person of color, and it has to be one of the home buyers, one of your borrowers that is the person of color. And you can see the example on the bottom here. That's exactly what the self-certification looks like. So we ask you to fill in your name, indicate the race or ethnicity that you want to self-certify, that you belong to, and then just sign and date the self-certification, and you'll be all set. So our calculating the income is an important aspect of all of our programs because they are primarily income driven in terms of qualification. So we want to make sure that we're calculating the income correctly to determine that they are indeed below the 120% of area median income. We do calculate income as prospectively over the next 12-month period, and so that's how we determine it here. From the time of enrollment for the coming year, we try to estimate what the household's income will be. And we have very comprehensive income guidelines. They're available on our website, and they go through every type of income, every type of employment, self-employment, benefits, all that can be found in our income guidelines. We do encourage you to use our the community lending login, and you can go in and enter the income of the household to determine whether the household would qualify for the Lift Up Homeownership program. And we, like I mentioned earlier, we use the HUD income limits, which there's also a link on this slide too. So this next slide goes through an example of our income limits. And so we do use the HUD income limits. We're using the 2024 income limits currently. So if you click on that link, it will bring you to the website. On the website, you'll have the option to select your state and the county that you want to look up the income limits for. And so in this case, we're looking at a Boston area home buyer. And then on the right side of the table there, you'll see where it says persons in the family. This is where I was mentioning that we are sensitive to the number of people in the household. And so in this case, the example is for a household of 4 individuals. So in that case, if there's 4 people in the household, we would use the column indicating 4 people. And unfortunately, HUD does not publish 120% area median income limits. And so to calculate the 120% limit, we use the 50% limit that's provided, multiply that by 2 to get to the 100% limit, and then multiply that by 1.2 to get to the 120% limit. And so in this case, for a family of 4, that would be the 81,600 times 2 times 1.2 brings us to 195,840 would be the upper limit, the 120% limit for a household of 4 purchasing in the Boston area. So in terms of member requirements on the enrollment side, you want to make sure that you're submitting all documents through our community lending login online system. Everything for all of our programs is done through our community lending system. And so you want to make sure you have access to that and all the documents can be uploaded there. Please do make sure to manage your grant pipelines. And so that entails entering the income and the household information for home buyers. The other thing for members to consider is that we do have a front-end housing ratio of 37%. Is a little bit of a soft guideline, and so we will allow the 37% to be exceeded. But in cases where it's exceeded, we need compensating factors. And so the system will ask for these automatically, but we like to see at least 2 months of savings, either 2 months of savings, minimal payment shock from the current rental payments. What are our other compensating factors? Minimal payment shock, savings, and minimal other debt as well. And so if we see any one of those, we'll usually approve debt to income ratios, front-end housing ratios over 37%. But that is one of the guidelines of our program where we will reach out to you if it exceeds 37%, just to get more reassurance of what you are thinking in terms of clarifying and solidifying the home buyer's ability to repay the mortgage. We also ask the member to disclose any related party transactions. So they are allowed. We just need an appraised value just to make sure the transaction is structured in a fair way. And so we just want we want any related party transactions to be disclosed. Includes family members. It also includes like current landlords. So if renters are buying from the current landlord, we want to see that related party transaction button clicked, and then an appraised value provided. And then we ask that you provide a signed P&S. Signed P&S is required at time of enrollment. We ask that the closing not be within 15 business days. Just so we do ask for those 15 business days to be able to review and approve enrollments. In special circumstances, we can work with you to approve them in shorter time frames if necessary. But if at all possible, we ask you to respect that 15 business day guideline as well. So whenever a file is not complete, if we need more information, if we need to get more clarity, the team here will put the file in what we call member action required status. This gives you, our member, access again to the enrollment. And then we give about 10 business days. We would never deny enrollment if we don't hear from you, but we ask you that you respond promptly as promptly as possible with providing additional documentation or clarification to any of our questions. And don't feel bad when we do this. I would say close to 80% of our files go into member action required. There's just a good amount of documentation to review, and so if it's missing, if the program disclosure is missing a check mark or a signature, we'll put the file back in member action required. If we need additional income documentation, we'll put the file in member action required. Just a way for us to manage our pipeline on our end. And then once you either provide the documentation or provide the clarification, you'll then resubmit the enrollment, and the 15-day business clock resets. So this slide just shows a few more procedural reminders. First, in the top left is that the reservation for the Lift Up Homeownership grant is home buyer specific, and so if a sale falls through, unfortunately, you can't just take another household from your pipeline and fill them in. You'd have to reapply, re-enroll with that new household. The benefit of the reservations being home buyer specific is that if the sale falls through, but the home buyer is able to find another home to purchase within a reasonable time frame, within that 90-day enrollment expiration, or sorry, 120-day enrollment expiration, the home buyer can keep the grant and apply it to that new property, given that they still qualify based on the area median income in the new properties in the new property's location. So that's the same point. Top right, subject property can change because it is a home buyer specific grant reservation. We ask that you don't upload placeholder documents. These programs tend to be competitive, and so we understand the urgency of getting home buyers in. However, we need to have all the documentation as final as possible upon enrollment. And so if we see blatant placeholder documents, we're going to go ahead and deny those enrollment requests. And so for enrollment, we need the income documents, and we need the signed purchase and sales agreement, and we need the signed disclosure. If we don't have those documents, you're not able to enroll the household. And then, as I mentioned earlier, approvals are valid for 120 days. We can grant extensions beyond that for extenuating circumstances. And yeah, these are just kind of 4 reminders for procedures, but we do encourage you to review our full procedure document on our website and at the link on this slide. A few tips and tricks before we wrap up this enrollment section. A reminder to please do not promise funds to home buyers prior to receiving enrollment approval. This goes back to the point that the enrollments are competitive. The money can often be scooped up within a day or two of it being released. We do have multiple releases for that reason, to increase the likelihood of you being able to enroll a home buyer. But there's still a chance that even after you enroll a home buyer, we might find that they're over income based on our own income review. And so, yeah, we just ask that you don't promise funds to home buyers before you actually receive enrollment approval. We ask that you don't provide more documentation than requested, and so our income guidelines are very specific about what documentation is needed for what type of income. For example, we don't need to see tax returns unless they have self-employment. And so we ask that tax returns are not uploaded unless they're documenting self-employment. If tax returns are uploaded, that means we have to do our due diligence and review them, and that could just unearth more questions. So that's why we ask you to stick to documentation that is required. And then lastly, we ask you that you do not tell us if the income has changed after enrollment approval. We are only concerned of income at enrollment. If after enrollment the home buyer gets a raise, gets a new job, that's great. We appreciate you trying to keep the integrity of the program, but we don't need to know about that, even if it would then put them over the income limits. The only time we want you to reach out to us is if like a new income source was disclosed that you were not aware of at time of enrollment. But just for income changes, we do not need to be kept aware of income changes. Please do promote the program for the benefit of you and your home buyers. Again, all of our programs here at the Federal Home Loan Bank of Boston are here to assist you, our members, in the business that you're doing, in the mortgage business that you're undertaking. And so please do. We have marketing materials available on our website, so feel free to reach out. If you can't find those, there's a press release, so kind of a standard press release available for you there, as well as some flyers. And so feel free and please do promote the program. Like I said, the program can be competitive, so we suggest that you go ahead and queue up home buyers, and by that we just mean enter the home buyer, the household information, and the income to the extent that you're able in the enrollment system prior to funds being available. There's two sections to the enrollment. There's the home buyer information and income section, and then there's the actual enrollment section that gets into some mortgage information. The system won't let you move over to that second half of the enrollment unless there are funds available, but that is why we're encouraging you to go ahead and fill out that first half of the enrollment so that your chances of securing funds when they are released are increased, just because you'll be that much further ahead when funds are released. Then obviously feel free to reach out to our team if you have any questions at any time, especially if you have any unique kind of loan scenarios that you want to go over before the enrollment period ends or begins, so that we can get you queued up for the enrollment. So that concludes our enrollment. I'm going to go and look at questions before we move on to the disbursement piece. Looks like we've addressed most, if not all, of the questions. All right. We'll move on and we'll circle back. And obviously feel free to continue to put questions in the chat, and we'll also have time at the end. And so with that, we'll get into part 2, which is requesting disbursement. So again, disbursement happens after the home, the purchase has been closed. So the member table funds the grant, will come back into our community lending login system, upload the required documentation, and then we will reimburse the member for the amount of the grant. And this is all done, again, through our community lending login system. On the closing disclosure, so there should not be a separate closing disclosure for a Lift Up Homeownership grant. Again, this is a grant, not a loan, so it doesn't need its separate disclosure. And so we just ask that on the closing disclosure, the Lift Up Homeownership grant be listed there on page 3, I believe, with the other down payment and mortgage information. So we'll need that closing disclosure with the grant appropriately reflected. We'll also need the 2024 note and mortgage for the Lift Up Homeownership program. And so there is a specific Lift Up Homeownership mortgage and note, and so that must be, the note must be executed, the mortgage must be executed and recorded, and we need record of evidence of it being recorded as part of the disbursement process. The third thing we'll need is the evidence of the first-time home buyer. We'll need a first-time home buyer certificate. That's the referring to the education piece of it. So we'll need, if they are a first-time home buyer, we'll need them to go through our approved education and counseling. And then we also require a member concession for the Lift Up Homeownership program. And so we need that documented on the disclosure as well. What we mean in terms of concession is just an added benefit that you're giving to Lift Up Homeownership home buyers. That could be a lender credit of some sort. It could be, there's no required amount. It could be as low as $100. We also see reduced or waived fees could count as a member concession, or reduced interest rate as well. So we just need to see one of those three things: a reduced interest rate, waived or reduced fee, or a lender credit documented on the closing disclosure. So as part of the disbursement, we do ask you to review all the documents. So the closing disclosure, the note and the mortgage, make sure all the name, dates, and the grant amounts matches on all those three documents. On the closing disclosure, make sure the Lift Up Homeownership grant is listed on page 3. Again, not with a separate CD. We want the grant included in the first mortgage CD, listed as a grant on page 3. The home buyer cannot receive more than $250 cash back. And so when all is said and done, if the home buyer is receiving more than $250 cash back, we'll either need to reduce the grant amount, reduce the loan amount, or do a principal reduction. So we will need to work with you to make sure that the final closing disclosure does not show more than $250 cash back to the home buyer. All earnest money must stay in the transaction, and so we do review the purchase and sales agreement at enrollment. We make note of the amount of earnest money that is promised, and then on the closing disclosure, we want to see that match to the same that was on the purchase and sales agreement. And then, yeah, I won't belabor the point too much more, but we do need to use the 2024 specific Lift Up retention document. So we do have a Lift Up mortgage and note. We also have an FHA deed restriction, so that can be used instead of the Lift Up Homeownership mortgage, but only for FHA mortgage products. And that just because it has slightly different language that makes it more compatible with FHA products. We have a deed restriction for FHA products. Other than that, you go ahead and use the normal mortgage and note for our 2024 Lift Up Homeownership program. And then we also want to see the first-time home buyer certificate filled out, or received. Make sure they receive their counseling. This slide goes through the member concessions. So a concession is required as part of the Lift Up Homeownership program. It must be evidenced on the closing disclosure. And again, the examples of member concessions are a lender credit, a waived or reduced fee, a below market interest rate, and we do allow other expanded underwriting guidelines. You would just need to make it very clear what those are to us. And so we just want to see one of those 4 member concessions evidenced on the closing disclosure. So we do require homebuyer education and counseling for all our first-time home buyers in all of our programs, and because Lift Up Homeownership is for first-time home buyers, it is required for all Lift Up Homeownership home buyers. The education and counseling must occur within 24 months of closing, and so we want to see them have received this education counseling in the last 24 months, and it must be completed through our approved list. And so there's a link to our approved list of home buyer education agencies that are there. That are, most of them are there. There's options for every New England state that are CHAPA HUD or NYSEC approved. We like to see folks, well, we need to see them use our approved agency because we do require that counseling component. And so while we do allow online education, the online education can only be done through eHome America, Finally Home, or Framework. And we still like it to be, we'd still like it seen, or we still like it to be done through one of our approved agencies so that we can be sure that they're receiving the counseling component. And it can be either, the counseling can occur either prior or post-closing. We just want to make sure that the counseling has occurred. So there's an example of our certificate on the bottom right there. You can see this was done online through Framework, but it also has MAHA, Massachusetts Affordable Housing Alliance, who is an approved agency, kind of indicated on top of the certificate of completion, and that's what we'd like to see for our homebuyer education counseling certificates. Again, there's a member action required component for disbursement. So if we have any questions or items that need to be clarified on the disbursement, we will go ahead and put disbursement in member action required status. If that happens, again, don't feel bad. It happens to the majority of disbursement requests. You would then have to go into our system, upload the additional documents or provide answers to our questions. We ask for that to be done as soon as possible. We ask for it to be done within 10 days. We can extend that if necessary. Then once you provide the additional documentation, you can go ahead and resubmit the disbursement request. That will restart the clock, and we'll get to our review as soon as possible, and definitely within the 20-day deadline. Some specific procedural reminders around disbursements. Again, we want to highlight that the grant reservation is home buyer specific, but the address can change. The closing disclosure as part of the disbursement request must reflect the home buyer's minimum contribution, so it must show $1,000 either as down payment or as borrower covered closing costs. We want to make sure that they have at least $100,000 of their own funds in the transaction. We want the CD to list the Lift Up Homeownership grant on page 3. Again, we don't want a separate CD. This is not a loan, this is just a grant, so it should be included on page 3 of the first mortgage CD. Disbursements, there's a 120-day deadline. So from when enrollment is approved, the disbursement should occur within 120 days. We can review in special circumstances where that's not doable, whether it's new construction or for some other reason. In terms of monitoring and retention, so after a home buyer receives the grant, you, our member financial institution, still remains the home buyer's primary contact for all grant-related questions or information. And so we ask that you keep documentation on your Lift Up Homeownership Program home buyers for at least the 5-year retention period. And so, yeah, there is a 5-year retention period for the Lift Up Homeownership mortgage. It is up to you, our member, to discharge that mortgage after 5 years. You do not need our permission to discharge a mortgage if it's been longer than the 5-year period. And so you can go ahead and maintain your own pipeline for that and discharge any grants that are beyond the 5-year retention period. And then, like I said, it is the member bank's responsibility to execute all discharges. If you have any questions about discharges, we can kind of confirm that whether a grant can be discharged or not, but it is up to you, our member, to do and execute the actual discharge. So, as I mentioned, we do have a 5-year retention period for our Lift Up Homeownership grant. And so this slide just goes through some situations that could occur within those 5 years and what might happen. And so if a home buyer decides to refinance within the 5 years, that's fine with us, as long as the kind of refinancing entity, the new loan allows for our mortgage to stay as a lien against the property. We're happy to subordinate and we're happy to sit in any position. So that's the kind of the easiest recourse for a refinance, is that we'll just subordinate our mortgage in any lien position, and then no further action is needed. If there is a sale during the 5-year, or if there's a refinance where they do not want to keep our mortgage as a lien, then we do have to go through and do a repayment calculation. And so the grant is forgiven on a prorated basis. And so we take the date of sale, and then, well, the 2 dates of sale. So the original purchase date, and then we look at the date of either refinance or when now the Lift Up home buyer is going to sell the home. We take the difference there, and then it's prorated on a daily basis, and so a portion of the grant will get forgiven each day. And so our goal here is we try not to claw back to recapture any of the funds. And so it's forgiven on a prorated basis. There is a second calculation that we do that's based on home buyer proceeds, and so in the case of a sale or refinance, we do require a closing disclosure of that new sale or refinance. And so in the case of sale, we do a comparison to see how much money the home buyer actually made. And the only time that we would collect any repayment is if the home buyer made profit from selling their house. So again, none of these funds wouldn't come straight from the home buyer. They would come from the sale of their home. And then in the case of foreclosure or death, the grants are completely forgiven. So this slide just gives more detail about the subordination process. So the homeowner or attorney will ideally reach out to you, our member, notifying them that they plan to refinance and need a subordination. We have a subordination template, and so you can email us for a copy of that template. We'll provide the template to you. You then fill out. The template just has some basic information about the old mortgage and the new mortgage. You'll fill that out to the best of your ability, provide that back to us. Our legal team reviews the subordination template and will approve it. Then you, our member, now that you have the approval, will go ahead and execute the subordination and provide an electronic copy to us to show that the transaction has taken place. So again, it's the member's responsibility to take care of the subordination. We just want to review the subordination template and approve that. This slide goes through more information about recapture or repayment. So this is in the case of a sale. Again, we will require the final seller's closing disclosure because it is forgiven on a prorated basis, and we look at the date the two sales to do that math. So we need the final closing disclosure. We'll do our review, do our math, again, do those two calculations. We take the lower of the two. Again, we try not to claw back any money if we can help it. And then if the amount due is less than 2,500, we also will not claw anything back either. And then so we'll do our calculation and we'll notify you if any money is owed. You, our member, would then collect the money from the home buyer. If any is due, send it to us via check, and then execute the discharge of the Lift Up Homeownership mortgage. So this slide has some tips and tricks of managing post-closing. So we ask that you do not tell the borrower that the FHL Bank is responsible for executing the grant discharge. Again, all discharges are the responsibility of you, our member. Do not try to calculate a grant repayment. It's not a traditional payoff. Like we said, the prorated amount you might be able to figure out, but then we do have the home buyer the net proceeds calculation, where we calculate how much money, if any, the home buyer is making on the sale. That calculation is dictated by our regulator, and we have our own calculator for that. And so yeah, all that to say, don't try to do the repayment calculation because it's our responsibility to do that. And don't tell a home buyer that Federal Home Loan Bank does not allow subordinations for refinances. We absolutely do allow subordinations for refinancing or lines of credit. Please do reach out to our homeownership team at any time for any questions, obviously, but especially if you have questions about subordinations or repayments. All this information and more can be found on pages 3 and 4 of the Lift Up Homeownership disclosure. And so if you have more information or need this in writing, that can all be found on pages 3 and 4 of the Lift Up Homeownership disclosure. And please do keep a list and keep track of your grant pipeline for 5 years. Again, it's a 5-year retention period. So we ask that you discharge all your home buyers after the 5 years, and that you manage the home buyers within those 5 years should they have any questions about subordinations, repayments, or otherwise. So this last slide shows our contact information and some helpful resources. So on the left there's links to our website. There's also a link to our YouTube channel that has tutorial videos that go step by step, kind of click by click through our system. So if you have questions about kind of using our system, how to enroll a home buyer, how to request disbursement, how to enter certain types of income documentation, that can all be found on our YouTube channel in short 5-minute tutorial videos. And on the right there is our full homeownership team. So again, I'm Kevin Ryan, the senior analyst. On the call today also is Isabel Tapania. The other analyst is Jack Newton. You'll be primarily working with us three. We're the ones that do all the first reviews of Lift Up Homeownership enrollments. Additionally, you can reach out to Livia Bork, who's the operations manager, or Caitlin Mulhern, who's the homeownership programs manager. Caitlin does most, if not all, the second reviews on enrollments and disbursements. And any of us are more than happy to answer any of your questions as they come up. So with that, I'm going to go back and review some of the questions that have been coming in. So there's some questions about where to find the marketing documents. They are a little hard to find, and you can feel free to, we'll take down your name and make sure you get them after the presentation as well. But they are located in the community lending login. So if you go to our community lending login site, log in, and then click on the Lift Up Homeownership program on the left. So on the left-hand side, there'll be a menu with all of our programs. If you clicked on the Lift Up Homeownership program, on the welcome screen in the middle, there'll be a link to our marketing materials. So we'd be happy to send those over to you. There's another question about, yeah, kind of the enrollment system, whether you can enter enrollment income only or what you can enter. So prior to funds being, well, so for the first release, so right now I believe the system is shut down. And so everyone will be on the same footing at 9 a.m. On June 1st when we have our first release of funds. However, after June 1st, once there's money in the pool, you'll be able to access the system at any time. And at that time, you can go in and enter the homeowner or the household information, so the names of everyone in the household, as well as their income documents and documentation, and the system will calculate their income. The system won't let you move over to that second half of the enrollment where it asks for the mortgage information. It will just give you the option to save and close. It won't give you the option to enroll the home buyer unless there are funds available in the pool. So if there are funds available, you can go ahead and continue. If not, you can save and exit. And then when funds are available, you can log back in, click on that same enrollment, and it'll bring you right back to where you left off, kind of in the middle of the screen, if that's where you made, or the middle of the enrollment, if that's how far you made it. So yeah, it looks like, so the marketing material might not be up on the website yet, so I apologize for that. We will provide that. We'll get that uploaded shortly and provide it to everyone that's asking in the chat. Folks are asking if we can use accepted offers, or does it have to be a purchase sales agreement to submit the application? We do not allow just accepted offers. It needs to be a signed purchase and sales agreement. We do encourage you to work with your home buyers to manage this aspect. So again, you can pre-qualify and you can underwrite the home buyers as if they have the grant in hand. Again, realizing that the grant is not guaranteed, so you might have to kind of run two scenarios through with the home buyer. And all that to say, so our grant can be baked into the first mortgage financing information and the offer. However, you cannot enroll a home buyer into our system unless there is a signed purchase and sales agreement by both the seller and the purchaser. Yeah, I apologize. I thought there was a slide about when the funds are being released. I believe that's still a little bit up in the air, but our plan is to release. Oh, May 15th is the first release. So releasing May 15th, June 3rd, and June 17th for the Lift Up Homeownership program. Yeah, good job. Is there any other questions that you feel like you can? Brilliant, awesome. So I'm just talking to Isabel. We're here in a conference room, just making sure we covered all of our questions. Oh, there one more question. Will the $5 million be split evenly between the 3 rounds? So not exactly, because you keep in mind that we have the state specific allocation as well. And so I'll actually go back to that slide. So this is what the total allocation will look like, but that 3.5 million will be divided evenly between the releases. Great, well, we really appreciate you taking the time to learn more about the Lift Up Homeownership program. Feel free to continue to put questions in the chat or reach out to us. We'll make sure to get you all the marketing materials. Sorry for that yeah, sorry for them not being available, but we are looking forward to working with you again this year and look forward to being in touch. Hope everyone has a great rest of their day. Let's go. And before we log off, there was a question about where to email us, so I will put our contact information back up here. So there are links under our names if you open up the presentation. Otherwise, our emails are just our first and last name at fhlbboston.com. Isabel, do you mind putting? Isabel will put my email in the chat as well, just so you have it on hand. Awesome. Well, with that, we'll conclude today's webinar. Thanks again for participating, and we look forward to working with you this year.